Hi, this is Lisa with Real Property Management. Today we're going to talk about some of the less common tax deductions that you have with your rental property. And these are going to be some things that you might not have realized, or maybe a refresher. So first we're going to talk about the common deductions. Those would be things like advertising and marketing to help place a new tenant. Cleaning fees paid to a professional cleaning company, for example. Any type of professional fees. So, for if you hire me to be your property manager, those fees are tax deductible. If you have to consult with an attorney on any type of legal advice, that is tax deductible, or an accountant perhaps to assist with your taxes. And remember that this is a small business. So your investment property, being a landlord, that becomes a small business. So there's definitely all types of different professional services that you might be using, and those are tax deductions. Utilities. So if you turn the utilities on in between tenants, repairs at the home, commonly known deduction. Premiums for insurance, and something else to mention here about the insurance, you may want to consider, just because of where insurance prices are going currently, you may want to consider a higher deductible on your insurance. Definitely talk to your agent about this, but one reason being is that any repair you have to do at the property is a tax deduction. So it actually is less than what you're paying for it because you get that tax deduction. So if you increase your premium, let's say your current deductible is maybe $1,000. Well, maybe look into increasing it to like 2,500 or 5,000. See what you would save on the insurance premium, because if you had a repair that you were going to turn into your insurance for 2,500 and you end up paying for it and not turning it in, that 2,500 is a tax deduction. So it's really not costing you the 2,500. So the savings in your premium may make up for the difference of what you'll also get back with it being a tax deduction as well. So just something to keep in mind when you're shopping for insurance. Now we're going to look at some of the less common deductions, such as local travel expense. So for example, I own a rental property in Surprise right now. So if I decide to send my husband over there to repair the garbage disposal, let's say, as owners of the property, he can document his travel mileage to go and fix that repair, and that becomes a tax deduction as well. Now, I always caution, if you're going to do any type of mileage deduction with the IRS, be sure you are journaling it or documenting it. So you want to keep the date, the time that you went over, and the exact mileage that it took as well. The next one is depreciation. So as a landlord, you can recover the cost associated with acquiring the real estate through the use of depreciation. So you can deduct a small portion of the cost over a period of many years. That actually starts before the tenant even moves in. So when it's a rental property, that is a nice deduction that you do get. Now, you do have to keep in mind that if you ever go and sell the property, you do have to recover that depreciation. But while it's an investment property, that is something that you can take advantage of as well. The next one is something you never want to happen, of course, but casualty or any type of theft. So, for example, if your rental property had damage due to a natural disaster, you might be able to deduct a small portion of the loss. Of course, it's going to depend on how much was damaged and how much is covered by your insurance, but it is something to keep in mind, should an unfortunate situation such as that come about. Thank you.